Just one moment. Close your eyes. Close your eyes. All right, right. All right. Good evening, ladies and gentlemen. Welcome to the C strategies, updates, and explanations. Last time we disclosed C strategies um, was quite a while ago, June 14th. So you figure June 14th till today is about 6 months later. What is the point of updating strategies? Because I am not treating you like delusional imbeciles. I think you're very intelligent. And unlike other people in the industry, you have to understand why, what, where. I need to explain it all. The point of updating strategies is that you can evolve with the market. It's easier for me to just sit back and say, here are the free strategies I gave you. If you don't like them, don't take them. Or even if you paid for them, which is, even worse, and not update them or just charge you with every update, I give them for free. So these are updates that hopefully they're more clarification issues and slight tweaks that will hopefully increase your hit rate. That is my goal. Who knows what happens with any of these strategies you want to use. Now, I'm going to explain these strategies very well. I'm going to tell you right now, for those people who are executing the strategies wrong, I am probably going to say, did you watch this video in which I am making right now? Did you watch it? Did you watch it? Did you watch it? You'll be like, yes. Okay. So what question do you have? Why don't you tell me why it's not? Why this strategy is not this? Why is this important? Well, let's say I come out to you guys and we're working as a team. I'm like, hey guys, anyone have a good 5 minute know your limit eight? And then you'll get somebody who just puts in something that is not a 5 minute know your limit eight. And then and that it wastes a little bit of time. Now, it's not that serious of a deal. It's not coming from a bad place. No, 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 no. It's all a good place. But I want you guys to be on top of it the entire way. I don't want to see like, hey guys, where's a good Mark 5? And then somebody shows me a strategy and I'm like, well, that breaks rules. Yeah, that's okay. I don't mind for the next weeks saying, did you watch this video? Did you watch this? I'll do that. But what I'm going to do today is I'm going to go over all the strategies. Now, you'll notice, so this, it starts off here. It's our newsbeat cheat sheet. You can have all the strategies right now. And you'll notice where it says version BM 3.0. All right, BM 3.0. That is the new version. If you keep going down, you'll notice things like this. Why wasn't this strategy updated? Because I didn't see a need to update it. Why wasn't the VWAPs updated, Mark? Why wasn't the pivot point strategy updated? There was no need to update it. I'm not changing that which does not to be need to be changed, as well as the 15-minute candidate reversal. Also, they need to be changed. That doesn't mean they won't be changed a week from now, or a month from now, or a year from now. So the major changes are actually the most common strategies that most people do. And granted, we generally have more data on those strategies to help people. So what I'm going to do is I'm going to go through every single step. I'm going to create visual examples for it through Microsoft Paint. And you're going to bear with me and watch them because I don't want any confusion. I'm going to say it right now. The chart system I use is TC2000. You could use whatever you want, but if your levels don't line up to my levels, then they just don't line up to my levels. There's not saying mine are better or yours is better, mine is worse or yours is worse. It's different. So if you are hell bent on getting on top of this program, you'd better realize right now what, a mistake it is to use a different charting platform, or what you're risking, at least, whether it's a mistake or not. So why don't we call it ways you can mess up? And let's just go ahead and increase this font to obnoxious. Ways you can mess up. You ready? One way you can mess up: different charting system outside of TC2000. Again, there are people who love their charting system. I'm so used to it. I remember there used to be something T3 used to give out called Magic Charts. I'm not sure if T3 owns it or somebody else does, or they just used it, but it was free and I loved it and I couldn't stand the change. I remember, oh my God, I got to learn a new charting. I got to use the new charting system, but I used the old charting system. Okay. I'm not used to using the new charting system. I want to use what's comfortable. I feel you. I'm similar. That's why people like me, I didn't get a smartphone probably 3, 4, 5 years after they came out. Like I was still typing on a keyboard, a physical keyboard on my phone that would like slide out when people were just on the screen going like this. It's true. And I am very hell bent. Like I'll tell you, like, and I know Harry, like, I have a new chair here that is hard for me to break in and sit in, so I've been using this old chair. Like, here's my chair. Take a look at that. You might look at it and say, Mark, the hell? You probably could afford a new chair, Mark, right? Damn right I can. Why don't you get a new one? Because this one works for me. Okay? That's why. When it comes to charting, if you can't follow what I do, damn right, it's absolutely, Kathy, very comfortable. If you can't follow what I'm doing, you're going to get mixed results. I'm going to be very clear right now. There's a reason why I share my layout, my software layout for trading, my software layout on TC2000 for charting. There's a reason why I share it, because it really helps let me know that I'm putting you in a level where you are where at least I know where your bottom is. If you're using a charting system, you could only do this much, and then you copy mine, you're over here. I know you're over here. I know this is where you are at worst. And that allows me to help grow you better and acclimate you better. That's a fact. As I said day one, as I always say, as I said in the beginning of the open house, and I said constantly, I'm not here to smile in your face and tell you everything's going to be okay. You could use any charting system, you could use any software. I'm not that person. Yes, there are many softwares people use, many that work well. You need to be able to design them for speed. If you are not designing your layout for speed, then you can't do what I do. You might get mixed results. I am telling you this. I am being honest with you. I give you all these things for free. I could charge you for my Street Smart Edge layout. How many of you would pay for that layout if you didn't have it? Every single one of you. How many people would pay for my 9 chart layout with all the lines if you didn't have it? Probably all of you. I don't want to effing nickel and dime you. That's not what I'm trying to do. Okay? I am not trying to nickel and dime you. Quite the opposite. Quite the opposite. I want to get you to that next level. So please understand as I go through this video, I'll be perfectly clear right now. You break any of these rules and better make sure that you're doing a great job at it, because good luck. You break a rule, good luck. You break any of these rules, good luck. All right? Are you here to succeed? And yeah, there are many traders who are doing very well here. And I'm here to make sure that you keep evolving and doing well in all market environments, even when they change. But for the people who are losing money right now, if I was losing money, I would just say, all right, yeah, give me everything. Tell me exactly what to do. Tell me how to set it up. Tell me what I could do. Tell me if I can't do one of the things, what's the best secondary way of doing it? Like, if I, no matter what, like, for example, you can't use Schwab in Canada because the Canadian government is they don't like day traders for whatever reason. So you have Interactive Brokers, which I believe is the best trading platform in Canada. And maybe you might say, all right, Mark, so with Interactive Brokers, what's the quickest layout? I'll tell you I don't have an effing clue. And then I'll start asking other people in the room who do use Interactive Brokers very effectively with a quick layout if they would be kind enough to share it with you. With that being said, so ways you can mess up. Let's make this number two. Let's say number one, breaking any rule I show you here today. These things they won't, maybe, look, maybe you have a soft think or swim layout, and there are many people who use many platforms, but here's the bottom line. I have no idea what platform you're using. I have no idea what the setup on your platform is. You understand that? So I can't tell you, oh, think or swim is bad. It isn't. It's great. Interactive brokers is bad. It isn't. It's great. E-Trade is bad. It isn't. It could be great. Some people say it sucks. Some people love it. There is no right answer. Are you making money? If the answer is no, I would highly consider not breaking any rule that I show you here today. You could do whatever you want at the end of the day. I can't tell you how to trade or what to do. All right, so different charting system, different trading platform. Um, breaking any rule in the S.E.E strategies. Those are ways you can mess up. Okay, you guys with me so far? Guys, understand? You're with me? You have to understand with the sheer volume of people here, everybody has a different computer layout, everybody has a different setup, everybody has different this, everybody has combinations. Some people have the same thing. Like, I don't know. Do you want me to really get to the bottom and acclimate you? That's what I said I was going to do today, right? This is what I'm doing. Yes, some of it might require change, most likely will require change on your behalf. Other than that, if you're breaking any of these rules, I am telling you right now, in all fairness and honesty, there's a chance that you breaking these rules are the reason for your failure. Okay? Now we're going to go to the strategy aspect of it. Here, let me just delete this scene and just make it better. One moment. Just let me get a nice little highlight going. Here we go. There we go. Okay, look. If you're making money and you're doing well, I care less about you breaking a rule than I do if you're struggling. Okay? If you're struggling, I'm not cool with it. I mean, I'm cool with it. I'm trying to help you, but I'm not cool with you continuing to struggle. I'm trying to fix it. Step one, choose any newsbeat name that gaps up. Any newsbeat name is either one of the 9 charts I post in the morning on Twitter. I also post in the alert window in the room. They are very clear. They are very obvious. There is absolutely no confusion. And they tend to look like, I'll just pull one up. They tend to look like this. So right over here, you'll see 9 charts, welcome open house. So pretty much a newsbeat name here is Tilray, Amazon, Baba, Zoom, Tilray, excuse me, Tesla, Amazon, Baba, Zoom, Tilray, Airbnb, Facebook. Spiders and Qs, not really, not really what I consider a newsbeat name, but if you can make money trading the newsbeat, if you make money trading those, I don't care. If you don't make money on spiders and Qs, I do care. See how that works? I'm pro you the entire time. I don't give an F what you do as long I don't give an F what you do as long as you're making money. So back to it. Step one is choose any newsbeat name that gaps up. Keep in mind that can also change it during the day. Step one here. So we're just literally going down step one. Setup is you have to wait for the first 1 minute bar. Now, step two is you set up wait for the first 1 minute bar to close, meaning you have to wait till 9:31 a.m. Eastern Standard to consider executing a trade. Now, some of you might be thinking, Mark, what if I front run the one and done and I buy it at 9:30 and 55 seconds? All right, I'm fine with that if you have a green candle. But here's the bottom line. All right. This to me is an okay green candle. This to me is an okay green candle. This to me is not really an okay green candle. What I am saying, what I am saying is this looks a lot better than that. Is it possible that a bar afterwards goes up and starts? Sure, anything's possible. See, I think one thing that upsets a lot of people in trading, I don't give an F if I miss 99% of the things on my radar. Doesn't bother me. I move on. Oh, all right, I missed that trade. There'll be another. Oh, I missed that trade. There'll be another. Oh, I miss it. Doesn't matter. So these candles is what I mean. If you get a candle that, and this is all open versus close, just so we're clear. We judge this on open versus close, which is part of the rule. So if you get a candle like this, and like this, and like this, and you're like, all right, I want to buy here, whether it works or not on, this candle right here, that's it. You're doing your own strategy. Don't call it a one and done. I don't even want to know why you're struggling with that strategy. I mean, of course I do, but I'm going to tell you, did you watch this video? Yeah. Okay. Where was your whiteout bottles while this part of the video was going on? You need to set your bars for open versus close. That's it. Yes. Yes. I'm talking I'm talking in a way. Hold on. One second. You get something like this. You get something where it goes like this and then you want to buy right over here. That's not a one and done. You're breaking the rule. It's very clear. You follow all these 7 rules if you want to call it a one and done. Otherwise, you might as well call it a sloppy Sally because that is a more accurate assessment than a one and done. Okay? One and done is for the first candle only. So again, so yeah, so it's a good question right here on step one. Only valid for the first time it happens. And don't get me wrong, I want to go through and answer all your questions. I am just not willing to accept you failing. Do you guys like that about me? Do you want a guru to get mad about you failing, or do you want me to flash you my panties and show you what a nice P&L I have? Okay. I am here to ensure your success. I am doing it in the best way I know possible. I have compassion for you guys. I have empathy for you guys. And I have to be a hard ass on you guys too, especially if you're struggling, because if I was struggling, I wish, I wish I had somebody like me riding me, riding on top of me, saying, do this, do this, do this, do this. I wish there was someone like me doing this for me. I wish I could coach me 20 years ago. I'd be like, Mark, come here. Stop that shit right now. Stop that shit. But older version of me, I thought, and I'd be like, shut up. Go ahead and do the Mark 1 right now. No, don't want to hear it. Just like that. That's how I would treat myself. Smack myself across the head. Violence is bad, but if you beat yourself up, it's cool. Anyway, moving on. So setup is you wait for the first 1 minute bar to close. So 9:31, you get something like this. What if on the next bar you get this? The one and done doesn't have to be on the second candle. It could happen like this. And then if you get over here for the first time, I mean, technically, you might argue, isn't that a Mark 1 if that happened in the first 4 minutes? Technically, yes, but it's an overlap strategy. It's also a one and done. Okay. One thing that I should have probably added here is you have to be on top of the first 1 minute. You really, this scenario here is very rare, what you're seeing here, but I'm trying to highlight a point. Okay. Next, the next time a current candlestick trades higher than a prior candlestick high, go long. Now, I front run, meaning if the next candlestick here wants to shoot up here, if it wants to shoot up here, the strategy states now that you'd be going long over here through the high. That's fine, but you have to execute a front run strategy. It's very important. So front run strategy would try to get you in. Where would you on this setup here? If there are two candles like that look like this, where would your front run be? Let's see how good you guys are. Buy before the first close, Louis. Exactly. So you would be actually buying seconds before this candle closed. That when you're trying to look for the next 1 minute breakout on something and you're getting ready to buy it and you get any candle, whether it's a Mark 1, no you eliminate, and it's closing like that, you generally want to buy it just before it closes. Like even a second, even on the second as it's closing is fine too at times for me. Okay? 4. Set stop at the low of the prior candle. This is your maximum loss. If you do this, you probably effed up. Keep in mind this for me is what I attempt to be my worst case scenario. More often I sell prior to this. In English, your stop would literally be at the bottom of this candle here. Right over here would be your stop. Yes, I am not sitting there watching, for example, this stock drift down and down and down and then stopping me out there. That's not happening to me as a general, unless there's software issues that I got in and I'm stuck. And we know the Schwab software issues in the beginning. That's why I generally shy away from one and done trades. Does it work well? It really does, considering you have no software issues. Okay, let's move on. Make sure the first bar is green. This is based on open versus close. Again, open versus close. There's a setting literally on your charts. Edit chart fill based on open versus close, not net change, open versus close. Okay. Again, if you're using a different charting software, Mark, I don't know where that is on my Schwab charts or on my Thinkorswim charts. You know what I'm going to say? Neither do I. Doesn't mean you can't use them. It just means I don't know. So again, if you want to go down your own path, you better find out that answer yourself because I'm giving you an answer for my path, and that's the best any human being can do. Right? So that's step 5, make sure the first bar is green. Step 6, make sure the 1 minute exponential 8 exponential 21, exponential 55, and the simple, where it says just 200 moving average, and the VWAP are located below your chart, are located on your chart below the candle top you're potentially buying through. What that means in very simple English here. So for me, I have my that's my 8, that's my 21. What is it? The 55. The 55 I have in like white, but let's just make it gray because we have a white background here instead of a black background. My 100 is pink. My simple 200 is purple. And again, I really don't care if like the purple one is here per se. So when I'm doing this one and done right over here, all these have to just be below. I don't give a F what number these are. The exponential 8 is at $203.83. I don't give an F. I don't care. Is it below or above? Oh, it's below? Great, you're good. Simple. That's all. But Mark, what if I don't like those moving averages? Then you're doing your version of the one and done. And if it works for you, I don't give an F. Great. If it doesn't work for you, I'm going to come back to you and say, well, look at this. Does that make sense for you? Does that make sense to you guys? So right over here, for example, let's say for whatever reason, all right, this is over here like this, but the 200, that stubborn SOB is right over there. And then all of a sudden you got your first candlestick of the day is this. This cannot be a one and done because all those moving averages aren't below you. Okay? So when I'm looking at my charts here, like on the 1 minute, you'll see I have all these moving averages here. For example, on Tesla, I just want them to be below where I'm trading. If I'm going short, I want them to be above where I'm trading if I'm going long. That's it. Now, don't get me wrong. I'll be very clear with you. Do I sometimes break the rules of what I show? Very, very rarely. If I do, I turn into hyper scalp crazy with low conviction and low size. So instead of taking 50 contracts of something, maybe I'll take 5 or 10 and I'll do it real quick because I know it's low conviction. But I'm not going to tout it like it's good. You'll literally hear me saying it's low conviction because the 200 is located above where it should be below. So I'm either going to ignore it or I'm going to take it. If you are not making money consistently, you better effing ignore it. I mean, I can't tell you what to do. Do whatever you want. Usually I ignore it. Doesn't make it right. Doesn't make it wrong. Where are you as a trader is the only question. If I was struggling, I would ignore everything that I use the word low conviction on. If I had a sub $25,000 account using only cash for options, that's what I would do. So that's what step 6 means. 7, take your profits is obvious. Next is the same thing on the one and done, except for the gap down. Again, very, very simple here. Very, very simple here. You're going to want like the moving averages above you, whatever they are, and just whatever, making them up. And, you're going to want these moving averages above you somewhere, and you're going to want the first bar to be red, open versus close. You want the first bar to be red. If you're sitting there and you're one of those people and the stock gaps down and you see all the moving averages above you, and then all of a sudden it breaks down here, and you're like, Mark, I did a Mark 1 short there, or one. No, no, that breaks all the rules. So one and done short, like this. Okay? With everything else, and of course we have the VWAP here somewhere. See, it really doesn't matter what these things are. It just matters where. It just matters where. Doesn't matter that your kid likes to run around and, you know, doesn't matter that your kid likes to run around and put his mouth on, every single toy when you go to, a play place or something, but you have to know where your kid is at all times, right? So just like the moving averages here, it doesn't matter what it's doing or the price it's at, just matters where. Where is the only thing. Do you guys remember watching Eyewitness News or the news back in the day? It's 10 p.m. Do you know where your children are? Do you guys remember that? So for me, it's like it's trading hours. Do you know where all the moving averages in VWAP are? That's it. That's all it is. It's that effing simple. You break those rules, good effing luck. Next, we're going to talk about the know your limit. Um, well, so somebody's asking, Mark, it seems you almost always say low conviction. Yeah, a lot of trades are. Yes, you're going to get a lot more lower conviction trades than high. Imagine most of my trades were like higher conviction, and I had like 30 of them or 40 of them in a day. What would that say about me? Think about that. If I had limited buying power where I could only do a certain number of trades, yes, I would rather do a higher conviction one than a lower conviction one if I had 25,000 more dollars or and I wasn't under PDT and I could use the cash to do as many option trades as I wanted. Yeah, I'd take them all. Does that make sense? Yeah, if I had $1,000 account, I'd be like, well, he's saying low conviction, low conviction, low conviction. And all of a sudden he's like, this one looks nice. Do you guys like that? I say that too all the time, don't I? Not, but yeah, there'll be more low conviction, bro, for sure. But if I had limited buying power, why would I want something with low conviction? Why wouldn't I just wait for something that where Mark is like, "What do you guys think of this?" And then you just see the forget about even what I think. You see the whole room like, "Yeah, yeah, 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 looks good, looks good. All right, you guys like it? All right, that's cool. That looks good. Whether it works or not, it'll work or it will fail, of course. But yeah. So this one looks nice, does rank above low conviction. Absolutely. All right, next. 1 minute, know your limit 8, 21, 5,500. Choose a newsbeat name that has oh, that was the bearish one, right? Here. Choose a newsbeat name that has a gap up that you like. Make sure the first candlestick of the day does not hit the moving average you want to use. So, what does that mean? Well, if the first bar looks like this, and your moving average here on your exponential 8 looks like this, you cross into it, you can't do this in the future. You can't do this and have it go down here and over here and then look for the breakout here because you already hit it down here. You see that? So usually when you have a gap up, you'll usually see like the moving average trying to catch up to you. And that's good. So that is my point. Your first step two, make sure the very first candlestick of the day does not hit the moving average you want to use or the strategy is null and void for that stock. Set up for the first time only, your stock price hits and breaks either the 821.21 EMA, the 821.55 or 100 EMA on the 1 minute chart. Notice the simple 200 is not there. That's done intentionally. That's not a strategy I like doing. Wait for the candlestick to close. So let's say you were doing the exponential 8 first. A lot of times it can run away from the stock and whatnot. And then, you get one of these doozies or these, and then it goes up a little here. And then it just literally comes in here. And that's how you know right over here you hit the exponential 8 for the first time. Okay. All right. So once it hits, you wait for that candlestick to close, meaning you wait for the seconds to go back to 0 for the next, and this is on a 1 minute chart, of course. So again, just so we're clear, we are talking about a 1 minute chart here. 1 minute, know your limit, and it also says the 1 minute chart. And then you're basically looking for something to break out like that. That's the general gist. Trigger, the next time a prior 1 minute high breaks on the current candlestick, buy the stock. Notice this doesn't take into account front run. Right now in this market, front running is critical for success. In some in markets long ago, front running was not a necessity, believe it or not. So keep in mind, in this current market, we front run, or I front run. I'm sure a lot of people here do too. Front run. So yes, that's what will trigger it. Notice it says trigger. The next time a prior 1 minute high breaks on a current candlestick, buy the stock. I'm buying it before this level hits. In English, even in this current environment, even though the trigger, for example, at this exact second, the next candlestick will be right here, what I am doing is if this is going to break out here, I am probably buying it, you know, I might be buying it right over there, for example, making it up, right? Making it up. That's me front running. If it goes down from as at the purple line, I take a loss. If it goes up, I can hopefully take a gain. 5, set a stop at the low of the same prior candle you used to determine your buy. This is the worst case scenario, and I tend to sell out much earlier. If this is you, you screwed up. This is your stop now, right over here. If that's you, if that is you, you screwed up. You screwed up. If you're getting stopped by the bottom there, you effed up. Period. Usually, if I buy on the purple line, I'm probably getting stopped out around there. I might be getting stopped out around there. And if I buy at the purple line and I make money on the flip side, generally I'm selling there or 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 there. I don't know where. But generally, the distance between the purple and the green lines is larger than the distance between the purple and the red lines, and that's how I take a good risk reward. It's the risk box, exactly. That used to be my assessment on when I used to date women, the risk box. All right, let's see. Sometimes it's 2 to 1. A lot of times it's 5 to 1, 6 to 1. You ever buy Tesla and it rips up 3 points in your face before you sell it? Okay. Nobody really knows what the risk is. It's not about 2 to 1 or 1 to 1 or 3 to 1. It's about you buy it. Are you right or wrong? It's working. I'm up money. What do you do? Hold or sell. It's working. I'm up money. What do you do? Hold or sell. It goes down a little from there, but I'm still up money. What do you do? Hold or sell. Okay. How about the flip side, Mark? I buy. I'm down money. F you. Peace. Later. Buy. I don't know what you mean. What is that type of momentum? I don't know what you mean by that. A stock shooting up while you're in it? So that's the worst case scenario on the stop. 6. Notice I embolden this one. Make sure no higher moving average is located above your trigger. For example, if you use a 21 EMA, the 55 EMA, 100 EMA, and 200 EMA cannot be located at a higher price than your trigger. So I'll explain step 6 right now very clearly. So let's say step 6, you know, you go ahead and there's 21 moving average here, and the stock drifts down here, hits the 21 moving average. But for whatever F reason, you have the 200 SMA right over here. And what you're trying to figure out is, Mark, can I buy here for a know your limit 21? And my answer is no, because this stupid purple bar is sitting on top of your face. But Mark, what if it works? What if I go ahead and I buy here and it shoots up like that and it keeps going and I just look up and I can't see it anymore with my binoculars and then I have to buy a telescope to see where the stock goes? Okay. You will miss trades that work using my methodologies. Following my methodologies, meaning you don't make a trade and the trade ended up working. Duh. Are you here to try to catch every up move? Good effing luck. Is that what you're trying to do? Good effing luck. But Mark, I should have bought there because it ran up. You want to break my methodologies because you are highlighting that play that worked at that time? Good luck. You should have robbed the bank guys because it just happened to be that every single police officer had to respond to a national emergency in another town. The electric power went out, and all the backup batteries inside the bank cameras went out at the simultaneously at the same time. You're stupid. You should have robbed that bank. Look, it would have worked. That's how you sound to me when you say that you should buy something like this. Now, again, you want to use low conviction and it goes ahead and you do it and you do your thing regardless, whatever, as long as you know what you're getting into. I just don't want you guys to be delusional. Hi, Mark. I have a small account and I went ahead and I took this trade, but except for this time when I took it, it went up a little and then all of a sudden it ripped down and I lost money on this Know Your Limit 21. I don't think it's a good strategy for me. And my answer to you then is that's not a Know Your Limit 21. That's some shit you made up in your head that you tried to lie to yourself about. It's like you go to the bar and you keep drinking and drinking and drinking and drinking, and then all of a sudden you think that person's a cool person. All of a sudden. You want to use beer goggles? You want to start making things up to befit your strategies? Good luck. You cannot do this. Step 7, make sure the moving average tested is above the first 1 minute high. In English, if you have something like this, and then it goes down here, and then and this is the first 1 minute of the day. Let's say this is right over here, first 1 minute bar. First 1 min bar. Let's say that is your first 1 minute bar of the day, 9:31 a.m. for example. It's your first 1 minute bar of the day. And then all of a sudden, you have this beautiful moving average, or let's even say avoid it and then hit it here. It's rare, but let's say this happens. This is not a know your limit 8 anymore. Why? Because step 7 says make sure the moving average tested is priced above the first 1 minute high. So in order for this to work, it would have to look, more like this. So if it comes down here and tests, you're trading above the first 1 minute high. See that? That's what it means. Next, make sure the moving average is priced above the 1 minute high. Make sure your stock is trading above the first 1 minute high as well. So right over here, the stock is also trading above the first 1 minute high. So you need the moving average above the first 1 minute, the moving average above this black line, as well as the stock price. In English, if the stock did something like this, and then all of a sudden you want to buy here, that's no longer legitimate. Why? Because you're below. So even if the moving average, for example, headed down from here a little like this, let's say the moving average is above that first 1 minute high, the stock isn't. That's not a know your limit 8. It's not a tip, it's a rule. Next are the bearish trades. It's identical, just literally flipped over. That's that's really that's really all it is. It's just literally, flipped over. Oh, look, they have a rotate button here. Microsoft Paint gets it. So let's say here's me flipping it over. Got a red bar here. You got a red bar here, right? And then all of a sudden, you have a green bar here and you have a green bar here. That's fine. It's just the same strategy as before, except reverse. That's it. Okay. All right. And if you have any questions, of course, I know I'm going to get emails. Let's go into the 5 minute Know Your Limit 8. Let's go into the 5 minute Know Your Limit 8 here. All right. Choose a newsfeed name that has a gap up that you like. Remember, these names might be coming throughout the day. They might not be on the 9 charts in the morning. It might be something that I wasn't focusing on in the morning that I added later. There is a chance that that can happen. There is a good chance, ladies and gentlemen, that that can happen. So you know it's funny. Um, I'll talk about it later. All right, so you choose a newsfeed name that you like. I don't want to corrupt this video with other information, but I'll show you at the end of this video. Make sure the first 5 minute candlestick does not hit a moving average. So let's say you're looking at a 5 minute chart here. Just so you know, it's extremely painful to do a video like this for me. So hope you guys are enjoying it so far and finding value out of it. All right, so this is a 5 minute chart for me because I'm trying to explain it visually as well as, you know, verbally. So if there's anything that you don't like about what I'm doing here, um, yeah, I just really don't give an F. But if you have any questions, just email me and I'll be very happy to help you because I'm always here for you. I'm always here for you, 100%. That I like doing. That I like being there for you. I'm just trying to explain it in a way. So let's say you have this moving average here and, you know, it hits right over here on the 5 minute. Then what happens is you immediately, at this point, move right over to the 1 minute chart. Let's say your 1 minute chart is looking like this, and then magically breaks out like this. Here's your trigger on the 1 minute chart. Here's your trigger on the 1 minute chart. Why isn't that dumb? Here's your trigger on the 1 minute chart. So the 5 minute Know Your Limit 8 is always a 1 minute trigger. You just have to go from the 5 minute chart over to the 1 minute. Okay. Make sure the 5 minute candlestick does not hit the moving average you want to use, or the strategy is null and void for the first 5 minute candle, meaning this yellow thing right here cannot be here. It cannot touch the first 5 minute candlestick right here. Okay. Setup. For only the first time your stock hits and breaks either the ADMA, and I'm showing an ADMA, again, if it ends up being a different one, fine. As long as the 5 minute one hits and breaks. So hits and breaks meaning it hit and broke it right here. So this is the part right here where I consider it hitting and breaking. Right over there. That's hit and break. Okay. Second, it hits and break on one of those moving averages on a 5 minute chart. Switch immediately to a 1 minute chart. Note this can be done before the 5 minute bar closes. So as soon as this 5 minute bar hits, you don't have to wait for this 5 minute bar to close. As soon as it hits, you immediately drop it. You immediately drop it. You immediately, I think the scientific term is you rotate to the next one. As soon as that happens, you just literally rotate from the 5 minute to the 1 minute chart immediately. You just literally just move. All right, the 5 minute chart hits, you're done watching the five. You immediately go to the 1 minute chart. And the next 1 minute breakout is simply your trigger. That's it. The trigger obviously says the next time a prior 1 minute high breaks on a current candlestick, buy the stock. Remember, I do front run these things. So on a front run, I might be buying it here, for example, or right over there, for example, just making it up. Whatever. Set a stop at the low of the same prior 1 minute candle you used to determine your buy. Should have a period there. Please note I almost always exit before this happens. Let me explain to you what that means in English. Here's your stop. Here's that prior 1 minute that you used to buy through. You bought on the green candle, but your hard stop, for example, is your hard stop is that red candle down there. Your hard stop is that red candle down there. So, if you get stopped out at that red candle, you screwed up. That is the worst case scenario. Even on trades I lose, I mean, it's so rare for me to have a worst case scenario loss. That is not where you want to lose. Just so we're clear. I'm spelling out the worst case scenario. Hence why I say I almost always exit before this happens. Logically speaking, and again, notice how I'm on the 1 minute chart here. My exit will probably be if for like a stop loss, like I buy at the purple line, I'm wrong. I'm probably losing somewhere around there. Just, making it up. It just as a visual representation. That's where I lose money. Where I make money on this thing, really, sky's the limit. But like, I can make money over here, over here, over here, higher if I hold longer, which I've been rarely doing in this environment. I can make money. I can make money anywhere there. Notice how little I lose. Notice how much I make. There's one key thing I'm not mentioning about the green bars. Let me ask you a question. Let's say the distance between let me show you something. Let's say I go ahead and I front run it right over here. What happens next? It goes up or down, right? We agree with that? Let's say I sell out right over here for a profit. Let's say I sell right over here for a loss. And let's pretend the distance between the purple and green line right over here. Let's pretend for a moment that the distance between this purple and green line right here, right over here, the distance between the purple and green line and the purple and red line are the same. Explain to me why I'll make more money on the green than on the red as a generalization. That's right. Implied volatility. So what happens is after the stock triggers through the black line, options have this underlying value called implied volatility. You'll usually get a spike in volume and they'll usually spike the price higher. So the funny part about using options is even arguing just saying like even if the distance between the green and black here and the purple and green there and the purple and red there, even if they're the same, I'll generally make more money on the winning trade, even marketing in and out, even with the spread and everything, because of the implied volatility. Just thought you'd find that amazing. Set a stop or an over. Make sure the moving average tested is priced above the first 5 minute high on your chart. So this goes back to over here. So here's the first 5 minute high, whether it's post chart reset or the first 5 minute high of the day, and really post chart reset too. That's where the conviction comes from. So I'm literally spelling out for you what a conviction idea looks from. So when I'm looking at something I'm like, it's low conviction, it's probably breaking one of these rules. just so we're clear. So you can see, right over here is the first, 5-minute high in the moving average test while it's above. That's a rule. Make sure on the 1 in 5, step 7, make sure on the 1 in 5-minute charts that no higher moving averages than the one you are using are above the price of the stock. Okay, so what does that mean in English? Well, if there was a 21 moving average here, this is no good. If there was a 21 moving average here, and let's say the stock dropped and hit it here, and just pretending that the stock was above the first 5-minute high here, it's okay that the exponential 8 is above you. Why? Why is it okay if the exponential 8 is above you? Because it says make sure on the 1 and 5-minute charts that no higher moving averages than the one you are using is above the price of your stock. So a higher moving average is meaning a higher number. So if you're using the 21 moving average, I don't care if the 8 is above you. Using a 21 moving average, I care if there's a 55 moving average above you or 100. For example, don't use an 8 EMA if there's a 21 EMA above you on the chart. Next, see how important that is, Alex? I know. I had to word. I didn't think I worded it well the first time. Really, the same thing is really reverse on the 5-minute bearish. I'm not going to go through it now I don't want this to be a super long video, but the exact opposite happens. You could literally, take this screen and rotate it like this, and you could just change these bars that are green to red and change the red bars here to green, and you could pretty much see exactly what's going on. It's the same thing to the flip side, okay? Same with this. Yep, my pleasure, Alex. Just make sure you have your credit card handy to swipe. Okay. And I know the words 1 in 5 minutes did get flipped vertical. All right, moving on along. We're going to talk about the Mark 1. Okay. So on the Mark 1, choose a name given in the Newsbeat live room. Again, that's part of the 9 charts or something else. Setup. For the first time, watch your chart until a current 1-minute candlestick closes without going higher than the prior 1-minute candlestick's high. In English, right over here, if you're going up and up and up, notice that the highs are breaking every single time. Like these are the highs of the candle. They keep breaking. So the first time it doesn't is where you sort of, oh God, why is it red? All right. So the first time it doesn't, let's say it goes like this, and the candlestick closes. After it closes, notice you didn't go above the prior 1-minute high. So then what you're doing for is you're waiting for it. You're literally, I'm sitting there at this moment, like it's kind of crazy. At this moment, I am literally with my my finger to mark it in and buy calls. And I'm just literally glancing over, realizing what the level is on the chart, and then immediately going to the ask of the level 2. And that's where my eyes are glued at this point. One of the things are going to happen. Let's say this number over here, the high of this red candle you see is, $50.50. I am looking at the ask after this candle closes to see if we're approaching on the offer of the common stock. On the common stock side, I want to see if $50.50 is ready to break or go towards. If I see, like let's say the stock closed down here and this level is, I don't know, we'll make it up, 49. 90. And let's say it closed at 49.90, but then I notice the high is 50.50. My eyes are on the level two, and then I see this candle going up. Then I see the offer, the ask, the right side of the level two of the common stock, not the options, even though I have a market order ready to buy the options, for example. I am looking at the right side of that level two ask, and I see $50, 20 cents, $50, 30 cents, $50, 38 cents, $50. All right, I buy it right there in anticipation that we will potentially test and potentially break $50.50. Now, let's say it doesn't happen on that candle, but this happens and then this happens. I see the stock coming close. It doesn't get there. It closes. The next candle opens and it pops. Where did I buy this front run right here? Where did I buy this for this breakout? Which candle did I use to buy on that breakout? It is a Mark 1, but which candle did I use? The small green one, the one right before it closed, second to last, exactly. So I actually ended up buying it on this candle because the front run strategy literally tells me if a candlestick is closing near its high, which I'll see seconds before it closes, like a second or two, or literally at the same moment, and that's where I'm trying it, and it's either going to pop or drop there. And if it pops, I'm up money immediately. If it drops, I'll take my loss immediately. This is going to work. It's going to work early. Amen, primo. All right. All right. Set the stop at the prior 1 minute candlestick's low. This is your worst case scenario, and it happens almost never to me. Okay. It happens almost never to me. Meaning, your stop here, let's say you go ahead and the candlestick happens to be moving here and it goes through, I mean, officially your stop is right over here at the bottom of that red candle where it was 49.90. If you get stopped out there, you had a very bad trade. No, I'm not saying the trade worked or not. Obviously, it didn't work. That's not what I mean. I mean, most likely you effed up is what I mean by you had a bad trade. You know how many good trades I have that I lose money? Happens every day. You know how many good trades I have that I make money? Happens every day. I mean, you screwed up. Most likely, you bought it in crazy flush came through, and all right, I get it, fine. But more often than not, you sell this at 49.90 after you're usually trying to buy it around here, and you're usually trying to take a loss down there. So if you buy it at the purple line and you sell it at the red line, you screwed up. Usually when you buy at the purple line. So why are you showing me this, Mark? Because that is your worst case scenario. It's okay to know your worst case scenario. That's a very likely place for me to sell. That's a very likely place for me to sell. Get it? See why so many people are successful here? Then all of a sudden the stock triggers. You have the implied volatility of your options spiking up. You have a bigger move setting up. You have more things in your favor than against you. That's, to me, in the current environment, the true epitome of risk reward for scalpers. There is, I have yet to see a better risk reward model than I'm showing you right now in my entire career. Okay. I've been doing this for a few days. I've been trading for a few days already, guys. Yeah. So what Louis is saying, sometimes with the IV, you can actually close for a profit on a front run loss. That happens all the time. I made 6 cents on that trade, and the offer was trading lower than where I bought in the first place. Thanks, Schwab. Next. Make sure the stock is trading above the VWAP. The 821, 5500 EMA and 200 MA on the 1 and 5 minute chart. So on your charts over here, let's say you're looking for a setup over here. Let's say you have this going on here, and you have a setup. What I'm saying is not basically, I want the 80 MA here, and then notice I color code them. This is the way I color code them. You could color code them however you want. I'm not telling you have to use my way of color coding, but it's obviously if you use that, it's easier for me to see when I'm helping you, but I really don't care what colors you want. Here's the 200 moving average, and here's the VWAP somewhere in between. Where's the 80 MA? What number? I don't care. What number's the 21? I don't care. Are all the spaghetti lines lower than where I'm buying? Then we leave it, then it's good. You need all the spaghetti lines below you. Okay? If you're doing a trade and for whatever reason the VWAP is here on top, you're not doing my strategy correctly. You're making your own crap up, which is, again, if that's what you do well and you could do it, do it. I don't care what you do. I just want you to make money. You feel me? You have a small account and you're struggling. This. I would stay away from this like the plague. Okay. Another thing is you can take profits and stop losses earlier based on personal comfort levels, obviously. 7 is make sure you are trading above the first, meaning you could sell wherever the F you want. As long as it's working in your favor or you want to swing it longer, you do better when you're holding these trades longer. A lot of people do. Be my guest. I really don't care what you do as long as you're making money and you're happy with where you are as a trader. If you tell me you're happy with where you are as a trader, I'm cool with it. Do whatever you want. Doesn't matter to me. I consider you successful if you're happy with where you are as a trader. Even if you're growing to a better place and you're happy where you are at this moment, I'm cool with that too. Feel me? Next one is make sure you're trading above the first 1 minute candlestick high before buying. So if you're doing a mark one here and this is the first candlestick, you have to be above there. Please note that this applies really often to chart resets too. So let's say like this happens in the middle of the day here, like 12 o'clock p.m. Eastern Standard, and you get this. Even on the chart reset, that's sort of your first bar again. That's the whole point of a chart reset. It's sort of your first bar. However, it still applies as written. You have to make sure you're above the first 1 minute candlestick's high. So if you go all the way back earlier and the 1 minute candlestick's high is all the way, back here somewhere, like I'm fine with that. So we definitely have to be above that level still. It's important. If you have something like this going on, where if you have something like this going on where here's the first, you know, here, and then all of a sudden, it goes here and here and here and here and here, and then all of a sudden you have this elevated volume chart reset right here, and then you go down here, down here, and down here, and then you want to try to buy here through the Mark 1. That's not a Mark 1. You're below the first 1 minute candlestick's high. Okay? Take your profits, happy trading, make money. Mark 1 short is the same thing but reverse. Again, I want to try to make this video as condensed and not super duper long. I know it's been going on for an hour already. Um, that's what the Mark 1 is on the reverse side. Just flip it. And if you have any questions, I'd rather just answer your questions at this point. Next strategy is the Mark 5. Okay, so on the Mark 5, it's exactly like the Mark 1, except you're using a 5 minute chart and your target is generally the day highs. So Mark 5, just literally use it exactly like the Mark 1. Some people are like, I like to try to front run the Mark 5 on a 1 minute chart. I mean, you can. For me, it doesn't matter if you're front running it on the 1 or 5 minute. You're just literally buying it before it triggers anyway. So I don't lean a lot of weight into that, even though I have seen times where it works well. Really, on the Mark 5, all you really want to do is you still want to be above that first candle. You want to be above the first 5 minute candlesticks highs. And you still want all the moving averages. You still want all the moving averages below where you're trading. Now, I know sometimes if the stock keeps falling, for example, like let's say like here your moving averages here, and just drawing them out for the sakes of visuals, and here's your stupid VWAP, and here is your little pink line, and there's your simple 200 line. You have something like that. Then what happens on your Mark 5 is sometimes you'll I mean, I'm drawing an example. I know you usually don't get red lines on a 5 minute that follow a bull flag like that. It's possible, obviously. And then you're thinking here, okay, well, I want to buy right here for this move. The problem is you're below at the 8 EMA on the 5 minute. This is a Mark 5. So again, this is 5 minute chart, just so we're clear. 5 minute chart. So this is not a valid Mark 5 right here, because it's not valid because you're bumping into the 5 minute 8 at this point. And I'm very clear on my rules. The next time a 5 minute candle trades above the prior 5 minute high, buy the stock. Set a stop at the prior 5 minute candle's low, potential target day high. Please note this, typoed. This stop is the worst case scenario, and this will rarely happen to me. Make sure the stock is trading above, as I just showed you, the 8 EMA 21, 50, 500, 200 on the 5 minute. You can take profits and stop losses earlier based on your personal comfort levels, and make sure you're trading above the first 5 minute high. So again, in this dramatic example, you pulled below the 5 minute 8. That's no longer a Mark 5. Now remember, your target is always day highs. So for example, if you start trying to break here, like you might get to day highs, you might not, right? I'll tell you, generally, I'm not holding for day highs. Some people do that better than me. Yeah, a lot of people do a lot of things that I do better than me. I honestly admit that. And let's say that black line is your trigger. Let's say this is the bar you are purchasing it on. So if you go through the black line and you buy in the purple, I'll treat it just like a Mark 1 and sell. However, just so we're clear on these strategies, the target is the day high, which is right over there. That is your target. Okay. I'll usually sell earlier, as I'm telling you right now. And if you don't know why, you didn't watch this video. If you ask me why, if you're target, I'm always going to get somebody who's like, "Oh, Mark, I thought your targets stay high. Why did you sell out there?" Keep in mind, I don't really give an F what I think after I'm in a trade. I mean it from the bottom of my heart. I do not care what you think after you're in a trade. I do not care what I think after I'm in a trade. I only care about what you think and I think before we're in the trade. You want to talk about nipping stupid in the butt? You want to talk about stop tilting and taking trades you know you shouldn't? Think about what I'm saying. I only care about what you do before you open up the trade. Okay? You have no strategy and you're opening up the trade? That's where I cared about what you're thinking about and you messed up. Once you open the stock position, I'm in, and you made the decision, all right, this looks good, it's a good strategy, I'm in, it's going to move up or down whether you like it or not, right? All you can do is control when you get off the train. You might see trains whizzing by. Think about it. You're seeing all these trains move by, and you have to sort of jump on while it's moving. You're on the platform, you see some trains ride real fast, and you're like, oh, I don't want to go on that train, it looks dangerous. And then you see another train coming on, like, okay, I'm going to jump on this train. You jump on the train, it goes. I don't know if it's going to fly off a cliff. I don't know if it's just going to keep going in the right direction, but you have to jump off at a certain time. Where? I don't know. I don't have a perfect answer for that. I'm not Diane Warwick. I do not predict the future, despite how many of you guys think I do have a crystal ball. Okay. If you're on a New York City train, just feel free to, consider it a big bathroom and just use it at your, however you'd like. Um, all right. So, yeah, make sure you're trading above the first 5 minute candlestick size. Make sure you're above all the moving averages. There's a lot of overlap in the other strategies. That's what really makes it simple. Similar thing to the short side, just do the reversal. Next and last, I give it's not really new rules for the chart reset. You'll notice it's very similar. I'm not really sure if you guys can click these in. It really the big change here was just adding the two videos. And what I'm gonna do for those, what I'm gonna do for those is I'm gonna just highlight them and paste them for you. So if you want to watch the chart reset videos, I'm posting them in the alerts. I'm posting them in chat. I'm going to post them on Twitter. And if somebody doesn't get them, I'm sure somebody will share them, share them again. But that, ladies and gentlemen, is pretty much the gist of it. That is pretty much the gist of it. The C strategies are not that complex. There are rules to follow. I do think I clarified some things. I used better English and, tightened up some of the loose ends. Some of the loose ends was just me using the word tip. Like, tip, do this. And some people are like, oh, tip, like it's optional. I should follow it or not. Now I'm changing the psychology of the entire thing, as well as adding solid parameters. Don't get me wrong. I am adding solid parameters. I talked about them a lot, but they weren't listed. All right. So I was going in this direction for a while, but now it's just official. You want to do a Mark 1 right. You want to do a Mark 5 right. You want to do a know your limit trade right. There are rules to the game. The rules. You break the rules and you're struggling. We're going to have a conversation for why you are breaking the rules. And I will help you with that. I'm not putting you down. I'm just explaining to you, here's the reason why you lost and effed up. Now, what can we do to fix that? Maybe it's your psychology. Maybe your boyfriend's being a jerk. Maybe your girlfriend is being a jerk. Maybe your husband or wife's being a jerk. Maybe you have some other issues. Maybe health problems. Maybe, God forbid, something serious in your life. I don't know. Everybody's an individual. But what this is going to allow me to do, it's going to allow me to help you better because I'll be able to pinpoint where you're screwing up. In English, if you're following all these things, and please notice the chart, not only the chart reset is obviously important here, but I also talk about front running as well in the chart reset video because I thought I would just put them together. Granted, they're two different things, but I feel like I just want to condense it together because it sort of explains how you put all these strategies together. So you can't really do these strategies effectively without this. So it's almost like here are all the vehicles in which you can drive, right? Here are all the vehicles in which you can drive, but here are the keys to your car. Do you want to start the engine? You follow it like that where it's pretty much, and I think I could even draw it out, and I want to do that. Pretty much if you approach it like this, you approach it like front run, and you just literally say, from front run it goes to C strategies. You can't do a C strategy without a front run. And just put it like this. Chart reset potentially right over here, or start of day. This is the flow chart. You want a flow chart? This is your entire flow chart here. This is the entire flow chart of how I execute every single day. Hold on. So you basically start here or start here. So this would be step one. This would be step one. This would be step two. This would be step three. You follow all these things that we said. You follow acclimating your software. You follow this, ways you can mess up, followed by literally following what I believe is an extremely simple flow chart. And granted, yes, there's psychology in between. You might be going through stuff in life, politics, health, God forbid, other stuff in life, infinite variables. That's the whole point of the psychology, to make sure we could keep you on this track. I'm not saying, there aren't things in real life that could derail you. What I am saying is, if you're able to do the flow chart like this, I have seen massive success right here in this room. So there's your flow chart. Starts with 1, goes to 2, goes to 3. And I'll just highlight that. 1, 2, 3. That's it. That's all you got to do. 1 to 2 to 3. This is a flow chart. That's it. 1 to 2 to 3. I don't care where you start 1. You always start 1 at start of the day. But then after start of the day ends and all the strategies are used, you have to go to chart reset. And granted, there'll be a lot of you who literally do not have a single clue what's going on because you're either new or for whatever reason you missed this video, and I'm fine with that. But what it's going to do is it's going to allow me to put you in a place where I could say, watch this video, watch this video, watch this video. And the powerful thing about that is, after you watch the video, then come to me with your issue. And your issue is not going to be like, what is a Mark 1? Because that just shows you're lazy and you didn't do it. However, if you come to me and you're like, what do you mean choose a Newsbeat live room name? What do you mean by step 2? What do you mean by step 1, 2, 3, 4, 5, 6, 7, 8? Now I can answer you. But if you come to me and just say, what is a Mark 1 in the first place? Then I'll be like, well, what don't you understand about it? You'll be like, everything. Well, what step are you on? What step are you on exactly that you're, and then I can help you and help individuals. I don't get this. I don't get this. I'm seeing a different number here. What can I do? What can I do? What can I do? And then I'll have a very effective way to follow through with an answer for you. So, yeah, that is pretty much the new layout for LC strategies. And I dearly hope that you guys enjoyed it. Happy trading, make money, and I will see you tomorrow morning. Newsbeat live trading broadcast. And if you're watching this on a later day, and obviously if you're watching on a Saturday, I'm not going to see you tomorrow morning on the Newsbeat live. Actually, I would, because I do coffee time on Sundays. Anyway, I will see you tomorrow morning on the Newsbeat live trading broadcast. Have a